Hey everybody, hello, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Thursday, the 29th of May, 2025. Ladies and gentlemen, I wanted to quickly pick up on a few economic data sets that came out, that will be coming out. So yes, but before we jump into all that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. Basically, like I said, we had quite an interesting week. Maybe not the most exciting, but in general, I think we're getting to the most exciting day, which is tomorrow. And not only that, it's the end of the week. It's the end of the month. It's tomorrow is the last trading day of the week and the month. And also, we're getting some important data sets that are coming out, and in particular, one of those, and that's the PCE, US PCE price index. Now, look, before we also jump into that stuff, let me quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at the economic calendar. And so, look, first of all, so far we were not having much action, or I would say, well, ish kind of, in comparison probably to the previous weeks, because Monday was closed. I mean, US and UK were closed. I mean, other markets were moving, but US and UK were closed. So everything kind of kicked off on Tuesday. Yesterday we got the Nvidia earnings, and those came out much better than expected. Look, in general, the market is kind of somewhat positive right now, but we just let me jump into the chart actually. So you can see that I'm looking at the cash index here on the Dow. We're pushing back up here after a nice test of this 23.6 here on the Fibonacci retracement, which is drawn from the lowest point of April to the highest point of May, or should I say the current highest point of May, because we still have 2 days and maybe something will happen. Maybe we'll go for a new high in May. So let me get rid of this Fibonacci, no longer needed. But look, in terms of economic data, so starting off, let's say from Wednesday, we did get the mortgage rate. That's very interesting here. So we kind of increased to 6.98, which is not very great, I would say, for the economy, for the house, for the builders, and for the stats of the new house, or just in general housing starts. So, and look, for I would say this is quite an important rate that came out. And look, I mean, so far it has been kind of on the lower side a little bit, but yep, it started gradually picking up, despite the rates going lower. But the average 30-year fixed mortgage lending rate, basically it is increasing, which is quite an interesting kind of moment in the economy. So that means that despite the lowering rates, I think that the market does expect inflation to pop higher at some point, meaning that the Federal Reserve will have to go and hike rates. Although we know that the Federal Reserve right now kind of is standing pat. I mean, it's not really going for any cuts nor hikes. So yes, if this continues to rise, if we start pushing towards 7% maybe next time, like I said, this is going to be a very interesting moment that interest rates are going down, but the mortgage rate is pushing higher. And yeah, like I said, this means that maybe the market is expecting inflation to pick up. We meaning that the Fed will have to go and hike rates, but at the moment, we are seeing the opposite kind of. We're seeing that there are projections to have how many? Three cuts. Let me just double check. One, two, three, two cuts. Two cuts by the end of this year, at least for now. That's what's expected. But I think that the current U.S. administration is trying to force Jerome Powell to cut earlier during the upcoming June meeting. We're not going to get a cut. It seems like that, at least. We're gonna just have the same rate again, which is fine, to be honest. And I think that this is it's good because look, the current situation with tariffs, with the current situation with this trade kind of issue between U.S. and other countries, it's not really sparking any optimism, and there is still kind of there is still the market is still worried that we will get something again after after all these delays of 90 days or July 9th and stuff like that. We will get another crazy moment where tariffs will be imposed. So although I get it, although yesterday I think it was the Manhattan court, which kind of deals with the trade, or what's the word, official word for that? The trade court. There we go. The trade court, the Manhattan-based trade court. There we go. So that one ruled that the current president's tariffs on other countries are a little bit unlawful, and yep, they should not be imposed. So again, of course, the administration filed for an appeal. So we'll see how that all battle will work out. But the thing is that for now, I think that the rates are not going to move. I think that Jerome Powell is standing his ground, which is fine in my opinion, for now at least, because again, we don't know if inflation will pick up. At the moment, yes, inflation is on the lower side. U.S. inflation is near Fed's target of 2%, and currently inflation is around 2.3, the headline one, of course. However, the forecast is that in June, the May inflation could actually tick up again. So that's the problem. So in a way, if you're going to cut now, you're kind of stimulating for more inflation. So that's where I think the Fed is trying to have more time to see what's happening with inflation, with the U.S. inflation, and of course they're going to be carefully monitoring Friday's numbers. Now on Friday we get the U.S. PCE, so let's have a look. At the moment we have an expectation of a lower number, a drop by 0.1% in the headline year-on-year figure. The core one is also expected to drop by 0.1%. So look, if it comes out on the lower side, then I think that this is where the current administration could just start firing bullets at the Fed, saying that look, inflation, headline inflation, the CPI's dropped. Now PCEs have dropped, so you need to go and do that cut. Again, I think that I hope that the Fed is not going to kind of bow down to this. However, of course, we don't know. Politics have their own ways. But the market, of course, is carefully monitoring that. And tomorrow, like I said, the market will be carefully monitoring this, just because not because of they will hike or not hike, but I think, and again, it's my opinion purely, that maybe everybody's watching what's going to happen with the PC, exactly for the reason that will there be, after, if inflation goes down, will there be shots fired at the Fed from the U.S. administration after like I said, if the PCE drops lower? So in a way, what could we expect if if the PCE does come out on the lower side? Well, basically the U.S. dollar index here could actually drift back down. Look, the U.S. dollar here rallied nicely recently, and especially yesterday, because of that ruling, that Manhattan Trade Court ruling, which said that the tariffs are unjustified, and unlawful, and that's what helped the U.S. dollar push higher. However, we're seeing a little bit of a slowdown moment right now, so I'm not really rushing into anything yet. So we're carefully monitoring the PC. But if the inflation number, if the PCE comes out on the higher side, or at least maybe the same as previous, this could actually help maybe the US dollar to make a move back up again. So again, let's see how this is going to play out. This is a very interesting moment I think we're going through. In terms of other data, Chicago PMIs is coming out, and that one is expected to come out a little bit on the higher side. But again, let's not rush into things yet. So hey, for now, like I said, I think that the main focus will be on the the PCE reading. What else do we have? Actually, to be honest, nothing major apart from the GDP growth rate from Canada. If you are trading something Canadian dollar related, just keep an eye on that. We are expected to see a much lower number on the growth rate, the Q on Q one. Well, actually, not the Q on Q one, sorry, on the annualized one, the growth rate annualized one. So we're expected to see a much lower number. If that's the case, this could affect the Canadian dollar in a negative way. We could see maybe just on that whole hype of this trade court ruling and the fact that, let's say, growth rate, the annualized one, comes out on the lower side. So this could push USD CAD back up here. So if I just remove everything again and start fresh, so basically on this one here we are seeing this move, current correction to the upside. That's all fine, that's all good, great. But again, we only can say that this is currently a correction back to the upside before another possible leg of selling, because again, not only that we're below this downside line still, which is drawn from the highest point of February of 2025, but also we're below all the EMAs. And look at this, the 50 crossed the 200. Now it seems like maybe the 200 could cross the 100 could cross the 200 as well. So again, a lot of things are pointing more towards the downside. However, at this point, if you're I don't like where we are right now. It's honestly like a real 50-50 here. It's always a 50-50, but sometimes you can get a little bit of a 51 to 49 idea or moment, whatever we want to call it. Look, either way, I'm still leaning towards the downside overall on this pair. But again, of course, let's not forget that we're in next month we're getting the BOC interest rate decision as well. So keep that in mind. And the bank is expected to actually not do anything during that meeting. Now, it seems like maybe they're going to take a little pause because they were cutting rates up until the previous kind of before, not the last one, but before that they were cutting rates, but then they slowed down. So now they're for two meetings in a row they might have no cuts. So this could help this could help the Canadian dollar to kind of remain on the stronger side. So that's why I'm kind of leaning on more towards the downside on USD CAD with occasional pushes, occasional retracements back to the upside. So anyway, long story short, ladies and gentlemen, in terms of indices, so yes, keep your eyes on this. I mean, we're seeing a nice push higher. So basically, the trade court thing is working well for the stock market here. Not to mention Nvidia's earnings, which came out not bad, really, not bad. Somebody might say even good. So yes, this is fueling Nasdaq here to the upside. And as I said to you in my morning webinars, in my morning live webinars, which are happening on Monday, Wednesday, and Friday, and this week on Monday and Wednesday, I said to you, look, I am still leaning towards the upside on this one but I need to see a nice push here somewhere above this barrier here, somewhere above this 21,500 zone. If we clear that, honestly, look at this. We're almost near the all-time highs. And to be honest, I think that there could be a chance of touching and creating a new all-time high. But again, let's not rush into things. Let's keep an eye on the numbers. Let's keep an eye on the PCE figures. Let's see if those come out on somewhere on the lower side, then or actually, you know what? This is an interesting moment. If PCE figures come out not lower, which in a way somebody would say it's beneficial for the stock market, but they still come out, let's say, at the same level as the previous numbers, still the market could rally just because it would mean that the Fed is kind of winning in this little battle, and that's what the market probably would like to see. A little bit more stability from the Fed rather than more instability from the U.S. administration. So again, let's see how all this is going to play out. But for now, let's aim for the upside. And looking at this technical picture here, yes, on Nasdaq, I am still targeting higher levels. The same story on the S&P 500. On the S&P, this one's a little bit more attractive maybe because we're clearing right now this territory, this current highest point of May. On the Dow, we are still approaching that highest point of May. which is roughly around the 42,000 kind of 873-ish zone. That's on the cash index. So if we clear this, yes, I'm going to go further north. So keep your eyes on this one. Hey, let's see how this is going to play out. Ladies and gentlemen, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time. I do know it's valuable, so thank you very much. I always appreciate that. But let me know in the comments what you think. Do you agree or not? Yeah, we'll go from there. So, ladies and gentlemen, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I'll see you next time for more top news from me, Darius Anucauskas. Bye bye.